Finance Bill 2025, actually Finance Bill is a yearly bill. It's not a financial year bill. So Finance Bill 2025. Let me start by saying that learning from what happened last year and borrowing from our national tax policy and medium-term debt strategy, the government took a conscious decision when we were coming up with this finance bill, even after listening to Kenyans. Again here, also we got presentation from Kenyans in different ways. A lot of us sent memoranda to us, both physically and even digitally.
Yeah.
And a lot of us presented themselves physically, again, to canvass their issues. Something that we noticed is that Kenyans don't want higher tax rates. So that is the bottom line. Number two is that as a country we are agreeing that we need a stable, predictable, certain tax regime. Now that then informed the preparation of our finance bill. That this finance bill has no major adjustments in tax rates. That we are not really using this finance bill to raise more revenue in terms of additional or varied tax system or tax rates. So that is the bottom line. And so before Muanguke nae na hii budget yangu, hii finance bill yangu, vile mlianguka na ile ingine, I want you to take your time and just understand what is in it.
Yeah.
And it is a very good question that you have asked. What we have done with this finance bill is simply to make tax system more efficient, to streamline it. Tax administration, that is what it is dealing with. There have been a lot of ambiguities and contradictions in our tax laws. And by the way, finance bill is an omnibus bill. It affects or tries to amend various pieces of legislation. We have the Income Tax Act, which is an act of parliament. We have Value Added Tax Act. We have Exercise Duties Tax Act. We also have miscellaneous fees and levies, and we have tax procedures. All these are being amended in a particular way so that we bring clarity, so that we clearly, where there is ambiguity, we make it more clear. So that is one. Number two, we are also targeting a problem that we have identified in our system, which is called tax expenditure. Tax expenditure, simply, you can use a simple terminology and call it tax refunds. A lot of business people, after paying value-added tax and other, then they claim tax refunds from Kenya Revenue Authority, those who are exporting goods, or those who are producing or selling essential commodities. So a lot of these goods which are essential or exported are zero rated. Some are also exempt. There is a difference in those two terminologies, which many people who are not accountants or finance experts don't or have not understood or appreciated. So zero-rated commodities are commodities that are taxed but at 0%. But the beauty with zero-rated commodities is that we have two taxes. There is what we call input tax and output tax under VAT.
Yeah.
Now, under input tax, it means when you are buying whatever you are selling, or when you are buying the raw materials to produce, you pay tax. You pay VAT. And then, when you are selling, you also pay VAT. You also receive on behalf of government VAT. Now, the one you are receiving is output. The one you paid is input. Now, for zero-rated commodities, you are allowed to claim the tax that you paid. You are going to charge zero, but you claim any tax that you paid. But on exempts, you don't charge and you don't claim. And therefore, theoretically, exempt commodities should be slightly more expensive than zero-rated. That is why we try to push essential commodities to zero rating. However, we have since determined the following, that one, the benefits of zero rating, a number of times the business people don't pass to the ultimate consumer. So you end up profiting people who are already doing well, if I may use that word. Number two, we are receiving a lot of fictitious and fake claims from business people, the tax cheats. This example has been given a number of times, that people who bake bread prefer employing more accountants than the bakers. Because really they don't need to bake bread. They just need to get smart accountants, maybe like Mbadi, to sit and cook figures and take to KRA, and they get claims paid back. But who is paying that? It is you who is struggling, who doesn't have that privilege of going to KRA to claim. From your meager salary, and allow me to use that, not that I really think that you earn meager salaries. It could be true, it could not be true. But whether you are earning reasonable salary, that is your income for your sweat. It is payment for your labor. You pay that tax, and that tax, instead of being used to provide education to our children, to provide health services to you, to give you better roads and give you water to drink, that tax is used to refund someone who does not have to get that money. Someone who is going to get, who gets that money and invests it for his children and grandchildren. So what I am saying is, how do we minimize that? So this bill is trying to reduce the number of zero-rated commodities. What we are saying is that these essential commodities, let's put them under exempt. And how do we cushion for higher prices in the event that now they are not zero-rated? We have decided that most of the raw materials going into those products are also zero-rated, are also exempt, so that you don't get, the input prices are low and then output prices are low. So just give me 1 or 2 more minutes. And just to say,
on the same,
yes,
there was report that in fact you're targeting some of the NGOs, and this will make their finances condense on the same in terms of zero rating and exempt. Is there anything like that in the bill?
No, I don't see anything like that in the bill. You know, they have been creating so many bills for me. And actually, that is the essence of this engagement also. You know, we have access to information under Article 35. But also, you are required to be factual. Yeah, when you get that access. And so, that same Article 35 provides that if I am misrepresented and misreported, I have also a right for deletion of the misreporting and misrepresentation. And by the way, I can also take you to court and charge you for misreporting me and misrepresenting me. But before I go that route, we need to engage to get the correct bill. The correct bill, my bill, does not have some of those things. Like they were saying that I'm going to tax the newborn babies. Those are not, that is not my finance bill. That is finance bill of other people.
Yeah.
But the finance bill of the Republic of Kenya,
yeah,
which is in the National Assembly, has now such provisions.
Okay.
In fact, what we have in that finance bill, a lot of it are also very good. Some of you are in the private sector, aren't you? Today, if your employer provides some allowance to you, in terms of meal allowance, beyond 2,000 you are taxed. I don't know whether you knew that. Beyond 2,000, if your employer gives you more than 2,000, you are supposed to be taxed on that. At the highest level, 35%. However, public servants, SRC has been raising that up. This one of private sector was set more than 8 years ago. We are saying we are moving that from 2,000 to 10,000. We are also saying that if you get gratuity, you work for 5 years, and you are entitled to gratuity or pension, gratuity at 31% of your basic salary for every year worked. You remember how, I know how your employment letters are drafted. Yeah? For every year worked, you get 31%. Yeah, that 31% when you get it at the end of the term, that contract period. Now it is not going to be taxed. It used to be attracting tax. We amended it in December, but the way it was captured, it was like it was only addressing public service schemes. Now we are saying any scheme, whether private or public, you are supposed to enjoy your retirement benefit or gratuity in total gross as you live. That's another thing. And for you in the digital space, so we have reduced the digital assets tax. Yeah, we have reduced it from 3% to 1.5% to conform to turnover tax.
Yeah.
So that there is no discrimination. That is also here. Okay? I can leave it there. We can discuss or debate others as we move forward.
The question of VAT exemptions.